And what a great guest we have. Perfect timing. We have Chris Gaffney. Chris, folks, is the president of Everbank World Markets. And, of course, if you haven't been over to Everbank, this is a great time to do it. Go to everbank.com, and you're going to see their specialty, folks, when we're talking currency markets, when we're talking commodity, when we're talking metals, and when we're talking foreign currencies. There's so much that's happening right now. It's the end of the year. If you're looking for a great IRA and you want to put currencies or metals, particularly metals, into that IRA, great time to do it. Chris Gaffney, welcome back to TFNN.
Well, thank you very much. It's great to be back.
I'll tell you, what a day out here. And, of course, folks, when you Google, Chris writes the Daily Finnick with Chuck Butler, okay? It's a great way to wake up in the morning, number one, if you want to know what's happening around the world. And Finnick is spelled P-F-E-N-N-I-G. So, Chris, talk to me about, first off, the Swiss National Bank and, what exactly happened out here last night.
Yeah, it was a huge surprise move by the National Bank. Back in 2011, the Swiss National Bank decided to peg their their Swiss franc to the euro.
Yes.
What was going on was with the euro sovereign debt crisis, the Swiss franc was getting a lot of inflow of capital and forcing the value of the euro higher as people were trying to seek a safe haven or a shelter away from the euro, which was in a lot of problems. Well, since the Swiss economy depends on trade with the eurozone, it was making things very difficult for Swiss businesses. So the Swiss National Bank stepped in and pegged their currency to the euro. And they would come in and defend that peg, and they were actually keeping the value of their Swiss franc down in order to keep it at a 1.2 to the euro. Okay. And they were having to spend a lot of money defending that peg as the euro dropped. They would have to force the Swiss franc down in line with the euro. Last night they decided to give up that peg, to quit defending it, and immediately the Swiss franc jumped. At one point it jumped 30% versus the euro. It settled back down to around, I think it's up about 13% when I walked away from this trading screens today.
Yes.
So it was a pretty dramatic move, and the key was that it was unexpected, totally, even 2 days ago, I think the Swiss bank president was saying that they were going to maintain that peg. So it was totally unexpected by the markets.
And I saw that quote, and it was 2 days ago. It's pretty amazing. It was an amazing quote, too, folks, that, they're not changing it, that this is very important to them. When we talk world markets, Everbank is that's one of their specialties. And I was looking at some of the foreign currencies you have, and particularly the metal accounts, because what did happen out here today, which hasn't happened in a good period of time. Gold's been off the lows of November, but it looks like gold start moving. It had the wide price spread, had a huge amount of contracts come in today. And this would be going back. I'm going back whether it's 15, 20 years ago, but the franc was always one of the strongest currencies in the world, and gold started moving with it today.
Right. We saw big moves. I think a lot of it was safe haven.
Yes.
Giving up on. There's a lot of mistrust of central banks now, and of course, central banks are running things right now. That the markets have been held hostage, if you will, by the central banks and what their expectations are. And now I think some investors finally said, you know what, I need to go seek some shelter, and they went into the hard assets and gold in particular.
Now, when we talk about Everbank, can you talk to us about how the metals accounts work? Because it's at the end of the year. I know there's, me personally, I'm in the gold market, okay, and in particular, after today, it's like, wow, this is really turning into, when I just brought up 20 years ago, what I used to do in 1980, Chris, right, is I moved a lot of airline tickets, and of course, there were so many different currencies that you had to know all the currencies, particularly because I had an office in London, too, okay? Sure. And when the Swiss bank did it, I said, oh, my God, this is, they're leading. They're saying, hey, I don't care what's going on. They're going to defend that. Well, I guess they lost the defense of their currency, but they're going out on their own.
Right.
And
they were pushing it down.
Yes.
So now they just said, you know what, we're not going to keep trying to force it down. We're going to let it go to a more what the market thinks is the value of their currency.
Which is great, right? Realistically.
Right. On the metals, you know, again, it's a great way for diversification of an IRA. And what we offer is American Eagle coins that you can hold in your IRA. So you can hold gold, silver, even platinum in the form of coins into your IRA, and you're able to purchase those coins, and we'll hold them in your IRA account here at Everbank. And for non-IRA holders, we've got unallocated accounts, which are actually, you know, probably the most popular accounts that we offer for metals here. And we've got four different. We've got gold, silver, platinum, and palladium. And I think it's smart to, you know, to have a portion of your investment portfolio, overall portfolio, into the metals. It's an asset class that's non-correlated with other asset classes, and it will spread risk. It actually reduces, by adding non-correlated asset classes, you're reducing the overall risk of your portfolio, and again, metals are an excellent way to do that.
Yeah, there's no doubt. And, you know, the proof is no doubt in the pudding, meaning that one central bank is going out on their own. What do you think about the aspect, you know, you had, you know, Lagarde was out there today, and other central bankers, they didn't seem too happy that one central bank went on their own. Now, with your experience, that's unusual, isn't it?
Yeah, and again, I think it caused investors to question the credibility of central banks in general. And I think that's what really, usually you've got central banks that will absolutely try to telegraph their next moves to investors. Investors don't like uncertainty.
Right.
I mean, in general, investors want to at least know what the rules are, or what the, you know, yes, they'll operate, and every investor wants to go into a different asset class or make their own decisions, but they need to know what the ground rules are. And here you've got a central bank that, you know, had said these are the ground rules that we want you guys to play by, and then 2 days later, they ripped the carpet out from underneath you. So yeah, it was it's kind of calling into question the credibility of central banks everywhere. We'll see from the ECB now next week. You know, that's the focus now. Is a lot of people think that, you know, the Swiss National Bank somehow knows what the ECB is going to do.
Yes.
And the question there is, of course, for your listeners, is, are they going to institute full-blown quantitative easing? Are they going to start buying sovereign bonds? And most investors think they will, and that would be, of course, a positive for those that look for more stimulus and the equity markets in Europe, if they do, but it would be negative for the euro. And so what the thinking is that the Swiss National Bank saw that coming down. Yesterday we had the European Court of Justice give tacit approval to that plan by the ECB to buy sovereign debt. So, you know, maybe the Swiss National Bank said, look, we're not going to go out there and spend hundreds of millions of dollars forcing our currency down to keep it level with the euro at the 1.2. We're not going to do that anymore.
Yeah,
so,
the freight train,
when
right?
the ECB, if and when they decide to do QE, we're going to be separate from it. So, you know, I think
in that context, you have foreign currency accounts. I mean, I'm sure that there may be some people out here, and these are so unique, folks, okay, that if you think that, you know, the franc is still going to go higher, I mean, they can go over to everbank.com and look at the foreign currency accounts you have and deposit money in the U.S. and you convert it into whatever currency they want, right?
That's exactly. We've got 20-plus currencies that we deal in, everything from Swiss francs to Chinese renminbi to we've even got Russian ruble accounts if you want to really speculate. So, yeah, you choose what you want to go into. You purchase at a competitive exchange rate. We'll hold the currency for you in a cash account or put it into an FDIC-insured CD. Now, the FDIC insurance just protects against bank failure, not against currency fluctuation.
Sure.
So, of course, these accounts are going to fluctuate with the underlying currency, but that's the whole reason you're going into them, is to take advantage of currency fluctuations.
Absolutely. Listen, folks, Everbank's phone number is 855-750-4051. That's 855-750-4051. Or just go to everbank.com. And don't forget about the Daily Finnick, folks. It's free. Get over there. You know, each and every day, as Chris is just going over these world markets, you can read it every morning. Either he's writing it or Chuck is writing it. Chris, thank you so much. You have a great night, safe night. We look forward to having you back and give us a great education again.
You bet. Always a pleasure.
Thanks so much.